Okay, good afternoon. My name's Adam Sills and welcome to 25 Minutes with Cap, where each month we discuss recent trends in the specialty insurance space. Today, I'm excited to have Ian Sawyer joining us. Ian's the head of US Casualty Reinsurance London at XXL. Before this, he's held a variety of titles, including being my supervisor as an intern at a reinsurance brokerage. Ian, thanks for joining us. As we go on from here, if you have questions through the session, feel free to enter them into the chat. We'll do our best to answer them. And just a reminder that the content of this webinar is the property of CapSpecialty and is for informational purposes only. You're not permitted to republish, share, or quote from this webinar without the prior written consent of CapSpecialty, which could be obtained by contacting marketing@capspecialty.com. I've asked Ian to be candid in this discussion, so let's use the Chatham House rules. Share the information you receive, but don't reveal the identity of who said it. So we hope you enjoyed the discussion. Ian, before we get into the casualty reinsurance market, how'd you get into insurance?
Well, thanks, Adam. Thanks very much for inviting me. It's good to catch up with you. Like a lot of people in London, just fell into it. My father was a broker in the market. My brother left school and went to work for an underwriting syndicate. I dossed around doing very little and sort of not sure what I wanted to do, and ended up getting a job which is now BMS on the claims side as a claims technician, and then a claims broker. In those days, in 1987, when I joined the market, we walked around with bundles of claims files. Every single claim had to go to an underwriter to be signed off and approved, and then to the LPSO. So yeah, I started out in 1987 and then moved on to the underwriting side in 91. And as you said, I've done a few jobs now, underwriting for the vast majority of my career, bit of claims, and then when I had the pleasure of your company working with me, it was on the broking side, on the placing side. So yeah, I love the job. It's one of the best secrets in the world, I think, what we do. And I've really enjoyed it. Yeah. Really
why underwriting versus broking?
I think it's my nature. I'm a bit more of, I'm not such an extrovert as a broker. So, I don't want to be center of attention, holding court. And I like the inquisitive nature of being an underwriter. I like the collaborative bit that you get as a team. I found on the broking side, you were very often on your own if you had a problem. And inundated with help when things were going really, really well, as everybody wanted to be tagged onto it. On the underwriting side, I feel like you win and lose with everything you do, right? I don't sit in isolation and write risks myself. We have a team of people. We chat through things. It's a much more a collaborative view on life. I find that really enjoyable. I like asking people questions. I'm interested in what they have to say. I enjoy the client meetings. I enjoy the travel piece of it. I enjoy having debates with the actuarial folk that we have here that are infinitely more intelligent than I am, but I managed to hold my own and spark a few good debates, and I enjoy that. So yeah, as I say, I think it's the best job in the world. So I'm lucky to have done it for so long.
And you've always been involved in reinsurance.
Yes, and I think that's probably my only regret is I never really spent any time on the insurance side. I had an opportunity probably 94 to go and spend about a couple of months with Reliance National in New York at the time, and for various reasons we didn't get it going, and so I never did that. And that would be my only regret. I think I like the portfolio management, Adam. I like sitting up and I don't want to as we debate stuff when you come to London and everything, I don't want to get into the weeds around individual risks and stuff. You write so many risks. How can I possibly find the golden bullet that's going to stop me writing your business? But from a portfolio perspective, I can be dangerous on a portfolio perspective, and that's what it's about. So I think you're seeing in London, there's a lot of syndicates that have actually employed treaty people to run insurance segments within syndicates. Chaucer have done it.
Sure.
Hiscox are doing it because they like somebody with a portfolio perspective. When you've got detailed insurance people, sometimes you can get into the weeds too much and you lose sight of of the bigger picture. In fact, I've got an insurance lady coming to work with me from AXA Insurance, and she'll be joining us in the next few weeks. And she'll bring in an awful lot of skills from the insurance space, but we're going to have to teach her the portfolio management and the reinsurance side of things, because it's a different business. But yeah, I don't think, I never say never, but I don't think I'm cut out for the ruthlessness of a broker. Far too trustworthy, Adam.
Right. So as a reinsurer focusing on portfolio management, is there a particular question or a particular thing that you look at whether you're talking about a current client that you have or a prospective client, that's maybe your go-to question that you feel is something to uncover if someone, knows what they're doing or is thinking about the right type of things in terms of managing their own book?
It's an interesting question. I mean, when I first started, you'd have your list of questions you'd go through.
Sure.
Now, with a bit more experience and a bit more understanding of the business, I tend to go with the flow of the client I'm meeting. So if it's a new client, it's just trying to understand really their culture. A lot of the people we meet as reinsurers to start with are, without due respect, you guys,
Sure.
and your colleagues, and you're
Sure.
not doing the day-to-day underwriting. You're managing the portfolios.
Sure.
So what can I get from you that allows me to believe the culture of the company is that it is a true underwriting company, that there is good controls, that there is good discipline and a good strategy around what they're trying to do, and a philosophy that sort of makes sense to us, that they're not going to take my capacity and just use it in a wrong way by arbitraging against me or smashing down great big lines. There is a discipline in it, and so from our perspective, it's picking out the salient points to see, is this a company that's got a good culture, and then from a new client perspective is how quickly can we get into the office to see those people. Sure. And not spend time with people I've just met in London, but to actually go and sit down with the underwriters who are doing the day-to-day job. And it is amazing what you can pull out without having to do a whole lot. If you get to speak to somebody, and I shouldn't really say this to you because you'll stop me seeing some of your people, but I'm sure. But good underwriters, they talk and talk and talk, and you can very quickly pick up that whether the culture and the strategy and the philosophy is aligned with the people we've just met who are selling the story from a submission perspective. So yeah, I love spending time in the offices and sitting down with the day-to-day underwriters, and they really enjoy meeting reinsurers because they very rarely get the opportunity to. Sure. And so if I'm left on my own with my own devices, I can find all sorts of things out. And I've seen everything from underwriting files where you've had marketing people cross out the underwriting quote and say, this isn't possible, we can't sell this, we're going to sell this, to right, I'm coming off this deal immediately, to just real quality individuals. We've seen it all, right, in the 30 years, seen it all. So, and I think there's only two places where I've come out of a client and said, that's it, we're off. I mean, in the time of, then we've had some issues with people, definitely.
Sure.
Sure. But it's culture.
Sure.
We're a portfolio manager, say we manage portfolios of business, good controls, good strategy, good philosophy, good culture. And then you can get in to see whether the people really understand what they're doing.
Sure.
So yeah, that's as I say to people, juniors that we're training up, it's almost like being a detective, right? The more you peel the onion, the more you find out. Don't expect a broker or a client to hand present you with all of the facts, sure, the good and the bad. If you don't ask the questions, you're not going to get the answers. There is a certain amount of data that's expected to be delivered as part of the relationship and the trading relationship and the transaction. But after that, it's down to you. So if you're not very inquisitive, good luck.
So you're in London. What are the biggest advantages of doing the US Casualty business in London?
Well, I mean, I would say we have a very focused distribution source, right? So the brokers, we only pay for what we use, right? So we're not out marketing ourselves, although we do a lot of that ourselves. So the brokers, they know what works for London. They know the types of business that London. So they tend to be much more focused. So we don't spend a lot of time spinning wheels on stuff we don't think is going to work. That's one thing. There's a certain commitment from a client if they're going to come to London to travel 3,500 miles and sit in front of people, spend 2 days of their time sitting in front of people they've never met before, selling them a story. So we tend to get a bit out of that. We tend to develop stronger relationships from that perspective. We get a little bit more, funny enough, we get a little bit more access to clients because we travel so far. So if we're going to the US, I can often go and see a client outside of a big market meeting or certain specific days that are there for audits, because the client recognises I'm coming from a distance and they make the time, and they also appreciate the fact that I'm only going to come and see them. So I tend and I try to avoid to see clients that are in a conference area, because the client soon works out, well, I'm getting a trail of people coming through my door, there must be a conference. I want to go specifically to a client and spend a day in their office and then fly somewhere else. They feel it's much more of a commitment, right? So we get a better access to clients, I think, sometimes. We all get the same data, we get the same information. We sometimes don't get it as on a sort of disadvantage. We sometimes don't get it as quickly as our US peers do, because our London brokers tend to go through the submission themselves, and they want to do a lot of the analysis themselves and do their own pricing and working it up and presenting it. And so, they do a lot of checks and balances in what's being given to us. But I think it's more focused, right? We're very clear on what we want to look at from a strategy perspective. We're a generalist underwriters, so we look at multi-classes. We're not very, the US reinsurance domestic market tends to be more specific, class specific. Somebody does professional lines, somebody does GL, somebody does comp. We do it all. We bring to the table as well perhaps a little bit more of a bigger picture perspective, because we work in syndicates technically. We understand some of the other lines of business because we're interacting with people, we hear what's going on. It's a very close marketplace. You've been here, everything's within a square mile. I can go and have a cup of coffee with anybody I want to from an insurance or insurance perspective. So we tend to have a little bit more information around the bigger picture. So when clients come to London, they're not just talking to us about a treaty. They want to understand the impact of the Ukraine war, for example, or a cat storm, whatever it might be. And we can often bring that to the table with a little bit more clarity than perhaps some of our other peers. So, commissions have been a challenge in the past. They're becoming less of a challenge now. Certain XOLs, we're paying the same price as the US market. On some of the more catty, volatile ones, we're paying it up front, but the US guys are paying it on the reinstatement. So it tends to swing around. And I think the London brokers still tend to bring a little bit more value to the table for us. And we tend to, we want to trade with people and brokers where we can get a voice at the table. Right? Sometimes it's really difficult as a reinsurer when you're putting quotes out and it's just being spread listed on an Excel spreadsheet and passed on to the client, and there's no explanation, right? So one of the things we do a lot now is our quoting emails are more of a sales document. This is the reason why we're pricing it. These are the issues we have. If you can provide us this, da 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 da. So the broker can then pass it straight on to his broker in the US or even to the client. So I think, but my view, and I get asked this a lot, how can you write US business being 3,000 miles away? Hanover have done it very, very well, and they're based in Germany, right? If you've got the right team of people with the right capital, you could sit on the moon and write reinsurance. It's having the people and the capital.
So, you've seen margin expansion, you've seen rates going up in a variety of casualty lines. How good is the pricing now?
It's a massively tough one. I mean, when I first joined, when I first started in the market in 91, there was no pricing actuaries whatsoever, right? We got our first pricing actuary in 1996. Right. So we've been writing 5 years of long tail business with no pricing actuary. the thought of writing casualty business now with a team, without a team of people, let alone just one person, is almost unthinkable.
Sure.
Right. So we've gone a long way. You know, the quality of data we get now is far more granular, far more detailed. There's a lot more transparency in what we're seeing. So it does help. But we're dealing with a volatile business, and particularly the London product, which tends to be more XOL orientated, so a lot more around the volatility. It's really, really hard. Is it a science? Is it an art? It's a bit of both. But we spend a lot of time on models. We spend a lot of time stress testing our assumptions. We spend a lot of time on looking at different things that make up. Can we look at it differently, exposure-wise versus experience? We're better at it, right? But it's not perfect. And it's not perfect because the insurance cycle will dictate that we're not perfect, right? That's why we have hard and soft markets, because obviously if we had a perfect pricing model, we wouldn't be in that situation. We'd be making money all the time. So, it is more difficult. And going back to your question around, the advantages and disadvantages, I mean, obviously from a London perspective, we do have to price in a little bit more because our cost of doing business here is sometimes a little bit more different than it is in the US. So those things have to go into the model. We continue looking at that as well. So, we're doing a better job. Everyone's doing the same thing, whether it's a partner re or a trans re or a Chaucer or whatever it might be. We're all doing the same analysis. It sometimes blows my mind that we can have such a differential in pricing between, when we're all doing the same thing effectively. Sure. With the same set of data. So that just shows you just how different people look at things, right?
And to that point, how do you differentiate yourself from from your competitors outside of a cheaper price?
So, in my view, is consistency. We should be able to be saying this is our price, and it will move up and down based on the loss picks. But what we shouldn't be seeing is huge volatilities between, cheap and expensive.
Sure.
I'm not. The days of trying to, make huge margins on reinsurance business is going to be challenging given the capacity and what's around in the marketplace, right? So let's stick to what we want, right? We've got a good plan. We've got our margins. We've got our targets. Let's price our business to get as close to that as we possibly can. So consistency is best. Brokers and clients, they want a consistent message. Are you in the class? How do you view the class? How do you view your line deployment, your capacity deployment? And, if we looked at your pricing over the last 3 or 4 years, is it pretty consistent? And so, there's some business that's now coming back to us, right? Because the market's changing and we've not been on it for a few years. And there's other stuff we've had to let go because it's gone below where we want. It's a marketplace. I mean, that's, as somebody told me a long time ago, it's a marketplace. And people will always be cheaper than you because they've got different reasons for it. And everybody has different views. There's a lot of client relationship stuff goes on at the moment where people, back a client and they're all in, and therefore they're probably going to hang on to business a bit longer than those that are not. But from our perspective, quote it, be consistent with our line deployment is the best way forward.
So you just took over a long tail book of reinsurance business.
Yeah.
How do you measure success for yourself in the near term?
That's a good question. I mean, I'm a very rare breed because I'm a long tail underwriter that's rejoined his tail because I left in 2017. Right. And I'm now coming back to pick up what I wrote back in those years. So some people might say stupid. Some people might say you've got a lot of confidence in what you did in the past, and time will tell. I mean, AXA XL is a massive business. The reinsurance piece is a massive part of what we do, and US Casualty is a massive part of what we do. Over the last 4 or 5 years, we've had some real challenges with resourcing, departing to different places for various different reasons. My job is to re-establish ourselves as a key market, a key quoting market, leading market in London. When I left in 2017, I felt we had the best pound for pound underwriting team in the market, and we're going to rebuild that here. And we've got some good people coming to join us. So that's the first thing, right? Rebuild the team, re-establish ourselves. We've had a lot of goodwill from clients and brokers, and we need to now repay that with a proper service and a proper product that allows them to turn around, brokers to turn around to their clients and say, there you go, that's why we stuck with them, because of it. So that's the first thing, right? Re-establish ourselves as a business, as a market, re-establish ourselves with the resourcing, and then to go and do what we should be doing all the time, which is stress testing our portfolio, working out clear strategy on classes of business that we want to be in and don't want to be in, move our business and pivot between the areas that make sense for us at the time and those that don't, navigate our way through the clients that we want to stick with, that we don't want to stick with, that are more transactional, and then and hit our plans, right? We've got pretty good plans. We do a lot of planning here in AXA, as you'd expect, very detailed, very thoughtful. So we're gonna it's hit the plan, right? And that will be the success. And then deal with some of the stuff that I wrote in the 2017 and 16 and 15 years that I'm sure that will come through, and we'll see where we go. But that's the thing with long tail business. You know, it's as you know yourself, it's a challenging business. You write something now and you don't know where that's going to be until 5, 7, 10 years out. And you know, the one thing you want to do as an underwriter is look back at something that's had a loss and say, I would have done that again. I would have written that risk again. What you don't want to be doing is look at something and say, that was a mistake, and I knew it was a mistake at the time we wrote it. So yeah, you know, re-establish ourselves as a key London market. The London market needs good leaders, and we intend to be right up there with one of those. So yeah, they're the short-term goals, and then we'll see where we go. I mean, nobody can look much further than 2 or 3 years, and it's such a changing place. But yeah,
that's I have 2 more questions, even though we're up against the time. I still want to ask them. So the what's one area of risk concern that people aren't talking about enough?
I mean, we could go on to all emerging risks, right? We can all come off the list of things that go. The last few years have taught us there's a lot of emerging risk that nobody thought about, or certainly didn't think about to the levels that we've seen, or the accumulations that we've seen. But as a US Casualty treaty underwriter, the things that concern me the most is how we've come out of this very soft market, how we've somehow protected our premium by expanding our coverages, right? And so our focus is not really as much about price, it's about coverage. And what is it we want to sell our customers? And what is it we want to sell our customers as one bucketed treaty versus separate products? And things like clash definitions, systemic definitions, you know, they're getting awfully broad, and that we need to concentrate not just on the price, that we also concentrate on getting some of those coverages addressed, and not, you know, customers need products, and we want to sell products, right? And we want to grow. We don't want to shrink as a business, but we need to be careful about how we look at coverage and take the opportunity in this changing market. And it's not a hard market by any stretch of the imagination. It's hard in insurance, and it's a changing market in reinsurance, and there's pockets of very good hard markets. But let's take the opportunity we've got to address some of the coverages that has got broadened as we've gone through this soft cycle. So they're the sort of things I'm concerned about really at the moment. As I say, we always ask ourselves about emerging risks, and you know, when we look at certain classes of business, what is it we could get from here? What type of loss could we get? So those conversations go on all the time, but the immediate thing now is coverage and price. Let's make sure we keep pushing the price. Let's make sure we understand the coverage we're providing. So
well, so no, that's helpful. The one last question we got in here, but you covered it a little bit. But I just wanted to ask it the way it was here. How hard is it to balance relationship building with clients, brokers, and ultimately profitability?
It's getting harder. Right? I mean, when I first joined the market 35 years ago, whatever, it was all about the relationship, right? Particularly in London. You know, lots of businesses that were clients we still trade with now were formed off the back of reinsurance capacity provided by London at the time. So, you know, it's very hard to walk away from those clients that have been trading with for sort of 30 odd years.
Hmm.
But the world's moved on. Everyone's become more sophisticated, and we're seeing more and more scenarios where we've had some bad loss experience and we can't get our money back, in any sort of form, because the client's either decided not to buy or to go and buy it from somebody that's offering a cheaper price. And when you've got a bundle of capacity around at the market, that's always a challenge. So, we value the relationships; they're important to us, but they're more now about how long do we stay at the negotiation table than we necessarily drives my decision. I'm a publicly traded business. I work for a publicly traded business. My responsibilities to my shareholders, and I want to trade with my clients because I need clients that are going to buy the products I sell, but I've got to deliver on the margin. And so, it's a bit easier when you were your own, again, going back to the late 80s, 90s, when syndicates were owned by the underwriters, right? You could make decisions based on what you thought was best for yourself. But we all work for companies now, and if we make the wrong decisions, the company will soon tell us we've made the wrong decisions, and there'll be ramifications for that. So they're very important relationships. Like I said to you before, when we meet people, understanding the culture and everything like that, why are they buying the reinsurance in the first place? Is it part of their business, or are they trying to arbitrage? And they're on, good examples around the market where people buy only when they need to, not when they want to, or when they perhaps don't have to, but they're going to. So, yeah.
Well, this was great. I really appreciate it, Ian.
I enjoyed the chat. Yeah.
Yeah, and really appreciate the time. Hey, if we'll have this up probably in a few days. So thanks for joining us, and also thanks for putting on a tie. You really didn't have to.
I thought I should do, Adam. I mean, the full London thing, right? Shirt and tie in the office. It's the way it is.
Awesome.
All right.
Well, hey, thanks a lot, Ian. Really appreciate it. Thanks everyone else for joining us.
Lovely. Cheers, Adam. Take care.